Welcome to the latest episode of KapVista Klips. Today we're here with Shane from XBR. How are you?
Yeah, good, Daniel. How about yourself, mate?
Good. Like the format of all the other episodes, I want to get into what you're doing and what XBR does, but let's start with you. Tell me about your background. Tell me about your experience and how you got to this point.
Yeah, cool. Shane King's my name. I'm the CEO of XBR, and we're here to talk about concrete. So I actually started in the concrete industry 27 years ago. By education, I'm a civil engineer. Also got a degree in business management. So basically, I started my career in civil construction, building projects. So up to sort of project director level, where I was building, multi-billion dollar sort of complex projects, both here and also did a 9-year stint in the UK. So either directly or indirectly, I've been kind of working with concrete for 27 years or thereabouts. Although partway through that career, I also kind of segued into startup businesses. So on one hand, I've got a sort of a project delivery background, and I think my mind generally kind of works like a project manager, where what's the problem, what's the solution, what's our budget, what do the stakeholders say, how do we deliver this safely, on time, on budget. So that's the way my sort of brain works with my sort of civil engineering training. But then, partway through my career, I kind of segued into startup businesses. Set up a SaaS business in the construction industry here in Australia, and then also further expanded into Southeast Asia, into the Philippines and Macau, and then also a little bit into the Middle East. Ultimately, we exited that through an IPO process. So I think that was a great experience to kind of couple my sort of project delivery experience with small business and how to actually grow a business and make it successful and then exit. Since then, I also did a second business in the digital space, and more recently, I've been doing sort of interim executive work as a drop-in CEO or commercial director or something of that nature. So I feel that sort of mixed experience has kind of got me well positioned for this gig, because I can do the sort of the civil engineering stuff, but then I've also got a lot of experience in being a CEO of a company that needs to grow and get a successful outcome. So that's a bit about me, but XBR is not just about me. There's actually 3 of us in the company. So there's myself as the group CEO. One of my business partners, his name's Adam Davies. He's also been the CEO of various businesses along the way. And in XBR, his focus is on the acquisitions. So he loves doing a deal, loves getting his hands dirty on a transaction. So I'm more the sort of operational lead, if you like. And Adam is the M&A guy to bring in the acquisitions. And then thirdly, we've got Pete Ryan, who's the chairman of our board. Pete's currently the CFO of a large business. So he's very comfortable, managing billions of dollars, operating at exec and board level, making sure there's the right leadership, strategy and governance in place to keep shareholders happy. Pete's non-exec, whereas myself and Adam are both exec, getting our hands dirty in the business. So I think between the 3 of us, we've got some pretty good skills there. We've all got, circa 25 years plus of experience, had some good successes, had a couple of fails along the way as well. We've learned a few lessons, as you do. But between the 3 of us, we think we've got a nice sort of mix of skills. Got something to offer.
Okay, perfect. So, all 3 of you got a very strong and successful background. Tell us about XBR. Why is this your baby? Why is this going to be your future?
Yeah, so I think the 3 of us have worked kind of on and off together over the years, but the 3 of us haven't come together. This is something we've been talking about doing for a while. So it's good to kind of come together and do something, fully committed as the three of us. So I think, it's probably worth talking through why XBR, because we feel the name kind of describes what we do pretty well. I think the X is for Gen Xers. So we're all kind of late 40s, early 50s, and we feel that's a bit of a sweet spot at the moment in terms of being an entrepreneur, in that we've got, 25, 30 years of experience. We've got some runs on the boards. But then also we've got youth on our side. We're still hungry. We're still energetic. We still, really want to do something. So, being a Gen X is probably a good place to be at the moment, where you've got that mix of experience, and also enthusiasm to go and execute. So that's where the X came about. The B is about buying baby boomer businesses. So we're going to talk about concrete businesses today, but it didn't actually start with concrete. It started looking at baby boomer businesses. The three of us have done, sort of risky startups before in tech and that sort of thing, which is great, but it comes with risks as well. And we wanted to do the exact opposite of a high risk startup. So we looked at baby boomer businesses, and we thought, there's a lot of great businesses out there. They started 15, 20, 25 years ago. They're stable, they're profitable. But for whatever reason, these baby boomers now don't have a succession plan. They're getting into their 70s, their 80s. Their son or daughter don't want to take over the business for whatever reason. They've got some health issues. They want to take some cash off the table. So the B in XBR is about buying baby boomer businesses. So that's where it started. It narrowed into concrete, so I'll probably come back in a little bit to why concrete. But the focus was, let's go and look at stable baby boomer businesses that have been around for 15, 20 years. And then the R is about rolling those businesses up. I think we're seeing some great businesses, stable businesses with 20, 30, 40% profit margins, so they're great by themselves. But if you can roll that up into a group, get some synergies, get some cross-selling going, roll out some technology, get some efficiencies going at group level, they can be even better and get better returns for the shareholders. So we think, XBR describes us pretty well. We're three Gen Xers. We're all about buying stable baby boomer businesses, rolling them up and getting returns for our investors.
Yeah, brilliant. Okay, so the roll-up play has a successful track record. I've seen a number of roll-up plays over the last 10 years, and there is a lot of money to be made. There are countless reports on the baby boomer businesses that are coming up for sale, where there's no succession plan. They're successful businesses. They're turning over millions of dollars, and they just don't know what to do with them. And a lot of these businesses are just being shut down, or employees are sort of stepping in and taking over them. But a lot of these baby boomers don't have succession plans because their kids have got their own careers and don't want to step in and fill them. So there's a massive opportunity there to acquire these successful, profitable businesses with a long track record, a long history, and then roll them up into a big, a bigger entity, and then eventually list them. So I think you're in a great sector. So tell us about the sort of businesses that you're targeting.
Yeah, I think, as you say, roll-ups are definitely not new. So, we first started talking about baby boomer businesses, and we looked around a bit. We looked in health, we looked at dental surgeries and GP practices and all that, but there were a few hairs on that, we thought. I've also done a bit of work in transport. Kinetic, obviously, have done a very successful roll up there and sold a large stake recently by buying up baby boomer bus businesses. So we looked at transport as well. And then we kind of came on to building supplies, and we looked at steel, and we looked at glazing, we looked at concrete. So we've looked at a number of sectors and subsectors, and really narrowed in on concrete. we think it is great for roll-ups. This is not the first time a concrete roll-up's been done. The big boys of your Borrells and your Heidelbergs and all that, they do acquire all the time. So there is plenty of acquisitions that happen in the concrete sector. We feel there's still plenty of depth for more to occur. We really narrowed in on concrete. Firstly, because just its stability. Concrete's been around forever. It will be around. There's nothing coming through to replace concrete. There's always demand there. We feel that certain sectors might fluctuate. Mm-hmm. Transport might be booming and health might be slow, or housing might be, rising. Whatever the sector is, there's always something that's being built that needs concrete. Yeah. And that's why these businesses have been so stable. We looked at other sectors. Some sectors, are prone to, say imports from China. You can't import concrete; it's too heavy. Some sectors are prone to disruption from AI or just move really, really quickly. Once again, concrete's not the case. AI and the like can add value, but it's not disrupting the industry. The industry doesn't move at a hectic pace where you need to be right on the edge all the time or fail. Mm-hmm. So there's lots of good reasons why concrete's stable. And then when we got into the numbers a bit more, we were seeing lots of good businesses that, are on 15, 20, 30, 40, even up to 50% profit margins on some of these businesses. So I think to do well in the roll-up, you need to be generating that cash all the time to fund that next acquisition, while you're also giving some dividends back to the shareholders on the way. So both the stability of the concrete industry and the profitability within it really lent itself to the roll-ups. And I think the third reason also was that, you mentioned before about what do these baby boomers do with these businesses. I think one thing they do is that as they get on and have made their money, they don't try so hard, to be honest, and they fade a bit. So we feel there's opportunity to get in there and do some cross-selling, roll out some technology, drive some efficiencies. These businesses are on good profit margins, but they're not really being worked too hard. In some instances, their best days were probably a few years ago when the founder was a bit more energetic, and they have faded a little bit, which makes them really great to come and buy in at a low price and get some energy into these businesses and roll them up and grow them even more.
Yeah. So how do you find the acquisition targets?
Yeah, so I think we have done a lot of work on this, and it's probably one of the differentiating factors with XBR. I think one differentiating factor for us is experience that myself and Pete and Adam bring. But the other thing is that we've done the work. So we've been working on this for about 18 months now. So we've gone and worked out why it should be concrete rather than something else. We've gone and looked at the concrete industry, done the market analysis. We've built a database of all the concrete-related businesses in Australia. So we do find sometimes in this space, people will come, and do a session like this and ask investors for $500,000 or $1 million of seed money to go and to think about this and do the work and bring back something. But one of the differentiating factors for us is that we've done that over the last 18 months. We've done the market research and the like. We've got thousands of opportunities in our database, and we have narrowed it to 3. So we've got 3 acquisitions at the moment where we've thought, these are the right ones to start with. They're located in the right area. The level of competition around them is manageable. There's growth in this area for future projects coming. They're local here in Victoria, which is where we're based. We wanted to start with something local. They tick all the boxes in terms of being stable, profitable, baby boomers wanting to exit. So at the moment we've narrowed in on these 3. Ultimately, we want to roll further acquisitions in and grow to a business of 12, 15 businesses, if not more. But we spoke to a lot of people who'd done roll-ups before, and a lot of the advice was start small, get a couple of acquisitions going at the start, work out what you're doing, fine tune that, and then scale up rather than trying to go too big too early. So we feel we've done the market analysis, we've got the database, we've got these first three targets, they're ready to go. We're just discussing term sheets with them at the moment, trying to finalise that. But we feel these are the right three to start the business off, and then we've got a big pipeline sitting behind us to expand from there.
Perfect. And then how much are you raising?
So raising at the moment, the ask is 40 million in total. 10 of that for equity. So the remainder being financed by debt and owner earnout. With that 10 million of equity, hopefully that brings in a really good partner or two. We are looking at both passive and active equity partners. So for 10 million, we're open to both options there. That 10 million of equity plus the debt and the earnout gets those three initial targets acquired, gets the group set up, gets us rolling, and then set a strong foundation to further sort of raises and growth from there.
Yeah. Okay. So the 10 million in equity, 30 million in debt. Is there tranches in the 10 million? Is it broken down on a deal by deal basis, or are you looking at the 3 deals in one?
Looking at the 3 deals in one, there are options on how we layer that. So, for example, we've got the purchase of the business. There's also options on the land. We could have less capital required up front and lease the land and purchase later, or purchase up front. And there's also some rights we're trying to negotiate for a fourth site. So we can layer this with a low upfront capital contribution and lease land and do purchase later, or we can go all in from the start and buy businesses, buy the land, buy the future rights. So we can size it depending on the equity partners preferences, but we feel these 3 are the right ones to go for straight up all together as a group.
Okay, perfect. I'm not going to take up too much more of your time, but for anybody who's watching this episode, this is not a difficult opportunity to understand. Roll-ups are a very successful strategy that's been done by small operators, by big operators. They can be very, very profitable, and most investors understand that the aging demographic, these baby boomers, don't have succession plans. So there's a really good opportunity at play here. If you're interested in finding out more about XBR, please reach out to my team. We can connect you through to Shane. He can walk you through the opportunities. Thank you very much for jumping on. This has been great. I'm keen to hear more about the different companies that you're looking to acquire.
Cool. No, thanks for your time, Daniel. It's been great.
Perfect. Bye.